Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line. He's Chief Strategist at T3 Trading Group. Scott, how you doing this morning?
I'm doing good. How are you feeling today?
We're doing good. Good weekend, Monday here. Trying to wake up the news desk here a little bit. Do you have your fading shoes on this morning? I mean, we had the big, close near the highs on Thursday. Couldn't hold it, gave it all back, and now we're right back up at the intraday high from Thursday's close. What are you looking for off the open, Scott?
I'll tell you, it hasn't been easy, and it's definitely been a little bit frustrating trying to be a little precise. Because, like you said, we had that reversal on Thursday, and then you would think that you could have held in better on Friday. I know I came in with like 4 or 5 longs on Friday, thinking, okay, let's see some commitment. Maybe we held the lower end of the range. We held at 2040. We didn't go all the way to revisit the 1980s or the 2000 area. So nice little pullback within the year, right? It's March, and then Friday, well, by 10:30, the Dow was down like 250 points. Trying to pretty much say, okay, no commitment to that low volume rally on Thursday. So for me, I got stopped out of a lot of my stuff, and then we closed fair with strength in the Russell, the mid caps, and the IBB. So I didn't go out short. I think anyone who went out short is probably like, oh my goodness, what do I do today? Is it a gap and go? So to come in flat, I feel okay. I'm a little upset that I'm flat-footed and now long a lot of some names. But you look at the landscape around. As far as in the morning, you see, Apple's not up. Netflix was downgraded. Every high beta name is up a small. Social media names are sloppy. So with the Spiders up 90 cents, I'm not going to chase and buy it like I did on like Thursday. I felt like we got that gap and go. There were a lot of shorts trapped. And I bought a lot in the morning, and then wound up being a good day today. I don't know if I'm going to buy the first hour, but I'm also not sure if I'm going to be shorting it just in case. So to me, I think I'm going to use the first hour to be a little hands off, and I'd kind of be surprised if this mid-level range resolves before Wednesday. So I think that you don't want to. 2064 to 2073, some big resistance in the S&P. I think probably better to fade that spot versus buy that spot. And then if the market does weaken, you have that 2040 is a big area where you'll see if it holds or there's some probing below.
Can we go macro on you a little bit?
Yeah.
I mean, interest rates. I mean, that's all the buzz. We had the Fed meeting this week, and I can't believe even Barron's reduced themselves to the fact, are they going to leave the word patient in there or take the word patient out? And to me, I don't trade those headlines. I just, the volatility, I rather trade the reaction afterwards. To me, the data that we're getting, I mean, they can't start ratcheting up interest rates, can they?
I think they're going to get rid of the word patient. They definitely have been trying to tell the market that in between social media and the networks, they've beaten that down to death. So I think that everyone knows that they can get rid of it. And I feel like the Fed has to get a little credibility because, again, I know people don't really believe in the jobs numbers, but, the unemployment rate has come down significantly. Our economic numbers are decent. I think symbolically, some people still don't think they've raised rates at all this year. I think they're going to do something just because they have to do it little by little because the market always obsesses. So do they do it in June or do they do it in September? That I'm not so sure with. But I think from a market stance, I think I want good news to be good news. I don't want any more of this bad news, good news to keep the stimulus because we had that for 2-3 years or whatever they did. And that's going on in Europe and Asia. So I think people want to see, some traction and some decent economic news, and then I think psychologically we start reacting better to that good news to be good news. But the dollar strength that we've seen, last quarter, a lot of companies started to say it was a little bit of a headwind. So by the extension of the dollar higher in the past month, people are starting to get a little worried about this quarter's earnings and then guidance and valuations are a little bit stretched. So I guess this range bound trade that we've been in that's not fun to trade is warranted considering the type of rally we've seen over the past 6 years.
Okay, good overall perspective on it. And I just going back to your earlier comment about you came in long and then you got stopped out. Similar position. I kind of got stopped out of short near the end of the day, and I was thinking, oh boy, I just need to lay it right back out. And I'm just like, this market's too confusing. We'll let things shake out. We'll see what kind of setups that we get on Monday morning. And it's hard to find some good setups. But do we have a setup here in Apple that may be a chance to find a little bit of support and go back up to the all-time high? Give us your comments on Apple.
Apple, it's been grinding in corrective mode since that red dog reversal 133. I know last week on Thursday, I actually had a pretty good trade when it traded below that 122.11 and reversed pretty nicely. And I actually got long on Thursday, and I took some home Friday, thinking that it would at least try and pin 125 for option expiration, and then it got weaker in the end of the day. So today, so right there, I sold it for a trade. Like I'm being very tactical with Apple lately versus sitting in it, because right now it's trying to figure out its new trend. It broke the 8 and 21 day, and now it's below both of those, and it's grinding lower. So you never know where it's going to stop. But for me, I'm coming into this week and I'm saying, the 50-day moving average is at 119 and change. The prior breakout level is at 120.50. I do, if my gut tells me it gets there, this week. And the Bears might even use it as a vehicle to, keep some pressure on the market from resolving that mid-tier range. So I don't know if I'm going to short it today to break, that 121, 122 area, but I'm also not going to be in a rush to buy it like I was on Thursday. So I do think that this 120 to 119 area could get hit, and if it does, I'll measure it there, and if we get some kind of nice reversal or signal, then maybe I'll take a little bit more size than I've been taking in it, for the past 2 weeks as it's been grinding down.
Yeah, Dennis and I also talk about the weekly options and the effect that the pinning of different issues have on it, and a lot of times like it really felt like Apple really wanted to go to 120 on Friday, but it wouldn't. There were buyers in there that wanted to cover their 123 options, the puts, buying the stock. So we'll see if we get the continuation move. It's trying to hold unchanged as we talk, but we'll keep an eye on that level as well as the 122 level. So let's move on to Netflix. I mean, everyone wants to try and short the stock, have it fill the gap. And then, so today shows a little weakness on Friday, and now it comes in and a downgrade. I mean, I'm just not comfortable shorting that stack down $7. Is it something you wait for a little bit of a rebound, or are you just gonna hop in with this Evercore downgrade?
At least I like to see follow through. And if you look at Friday's candle, Friday Netflix closed near the low of the day. It's still below the 21 days. So I think most people, as from an active level, would have taken that out short versus long, because it closed weak and it's weakening. So I'm just happy for guys that had the Pujonis to take it home short. They're getting paid for this downgrade, down 7 points. Can you short Netflix down 7 points? At this point, after a move from 480 down to below 430, I'm not going to do it. But it doesn't mean I'm also going to go out and just buy the dip here because of the size of the move. I think you do have some support around 433, and then at some point, maybe it does want to test that earnings gaps closer to 410. I would say if you went out short, trying to get momentum after, with the week close Friday, I would cover. The way I do it overnight is I usually cover half on the open, just to get paid, or sometimes even pre-market. Like if I was short Netflix right now, I'd probably be covering, a third to half of it, and then I wait to see how does it react in the first 30 minutes. So if, like just say today, maybe it's down 7, it goes down 10, and then it holds there. And futures go lower and it stops going down, I might be a buyer versus that low because it's calculated, or the same way if it's down 7 and buyers come in and it only goes down 5 and then comes off that high in the first 30 minutes, and people who didn't get short Friday who think it's going to test the gap, then maybe you short versus that 30-minute high, so at least it's calculated. So what I like to do now is I want to make sure it's calculated, and the way you do that is you could trade versus whether it's the 5-minute, 15-minute, or 30-minute side of the range. But at least if you're short overnight, you did the right trade, you took it home. Congratulations, you're getting rewarded.
Have you ever seen someone try and talk up their stock as much as Elon Musk does with Tesla?
It's funny because all he wanted to do was talk it down when it was trending well. I remember, that stock, I missed it so much because when it was above the 8 and 21 day and then had its run to the 270, it was an awesome trading vehicle. It was, it flagged, it held, it just, everyone was bashing it, but technically it was an awesome moving vehicle for electric car. There you go, a little pun there.
Yep.
But then, the stock changed when you had that upper level flag, if you remember, back, where is that? That was somewhere, hold on. That was right here. The stock changed on the wide range bar on September 15th, 2014. If you look at the size of that wide range bar, that resolved that upper flag to the downside, and it also broke below the 8 and 21 day. That was when my whole perception of Tesla changed. I was like, okay, it's now broken. It's different. Blah 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 blah. You got to be more careful. And pretty much since then, it's been locked in a downtrend, and it's below every moving average. So the question is, does it hold this 185? A lot of traders are trying to get short below that. They would think it'll break 185 to 190, and it seems like it only goes up when there's some kind of story about it and Apple or it and some kind of investment from China, which is not reasons why, but there's a big short interest. So people who are short that, no one wants to be caught in, some kind of collaboration with Apple. Not saying that happens, but every time there's news there, that's what gets the spike. So this morning it's up, what, $2-3? There's probably some guys short overnight because they thought that, this would be the week it breaks 185, and it still might be. So I would say, write down resistance 1, 2, and 3. If you don't take shorts overnight and you want to try and fade this and you don't think it's going to hold, you have resistance 1 at 195-ish, and then you have real big resistance where the moving averages are curling down around 203. But, since, again, that September, it's been, caught in this downtrend where rallies have been sold, which was different than the year prior. So it'll be an interesting spot this week. If it holds this 185 and tries to break this descending channel, maybe it acts better, but ultimately it feels like a broken name, and the shorts wound up, if they stayed the course, wound up getting some money back as the trend it has been lower lately, and we'll see if that continues.
Yeah, I mean, also, you have the press conference on 9 a.m. on Thursday, about to end range anxiety with the OTA software update. I mean, maybe it's just hands off, just maybe let it float up like it did last time. Remember when they made the announcement, Elon got on and it had the pop, and then
Right.
It was like, see ya. So, maybe it's good to be hands off a little bit on this and let it float up and then pop it before the conference.
But we'll see if it's a gap and go. If it opens up 3 and the shorts come in and try and sell it down and it stays up 3, then maybe as an active trader you can get long versus the 30-minute gap, and then there is some room to those moving averages. But I would just be a little bit more skeptical than the past trying to buy any strength in this thing.
Okay, sometimes when you look at a chart, you get a good feeling. Sometimes you look at it and you're like, man, this thing's in the middle of the nowhere. I'm kind of in the middle of the nowhere phase here with Facebook. You had to break down, you put some support in, now attempting to rally. You trading the ranges in Facebook, or you looking for a strong rebound?
The range, the big macro range has been in place since August, and all there's been is false moves, misdirections. There's been some spurty action. So there's been money to be made, at each end of the range or some setups. The last one when ignited through that 77, but then failed at 82. I'm coming in flat Facebook. I don't have any options on either, which I usually, like 2 weeks ago when it looked like we were holding 79, I was going to break over 82. I tried to play that breakout, but it didn't work. Now I just think it's rebuilding. It's in this range, which is like what our market's in. It's in a range, and it's not that exciting looking. If it could do some work and stay above this 77 for a session or so, and then starts to close back above 79, maybe that'll tell us that the market, the overall market is acting a little bit better, and maybe I'll get a little bit more active in it. But at this point, it's just like a choppy mess. And when I look at LinkedIn real quickly too, LinkedIn is kind of interesting today. It's on my game plan where so many false breakouts above 272, and then Friday it closed on the lows. So maybe there's a trade here if it breaks below 258 today to fill a portion of that gap. If it can't break out and it's sitting near all-time highs, and and momentum is hard to find anywhere, perhaps with the futures up, if it can't get away from this danger zone, maybe there's a cute short into that gap for LinkedIn.
Yeah, I think Morgan Stanley put the top in that thing. I don't know if it was on earnings day or whatever, but they came out with all their bullish prognostications, and they had hit 276.18. Ended up
Yep.
closing on the lows for the session, and then it's quietly lost another $10 here. So don't like that big gap area as well. So how long can Twitter stay in this narrow range here? Couple weeks ago or 10 days ago, JP Morgan comes out. You got to own it. Compelling risk reward ratio, all that nonsense. And just kind of hanging in there. Teased us 3 days ago that it was going to get into the gap area. Hit a wall at 50. It's just kind of one you just kind of like, hey, show me the way to go next. I'm not going to try and interpret it.
Well, I think that if you're an investor, I like Twitter. If you're more of like a longer term swing trader where you're not as active, I think that it still looks good. Buying, having a little bit in this 46 area, makes sense. And if perspective wise, to start the year it was below 38. So from 38 to almost 50, that's a really nice move in less than 2 months. So for it to be in choppy digestive mode and actually protect that gap. If you could have fallen into that gap, it could have, lost a lot of momentum. But on that day, March 11th, it actually reversed. That was a little red dog reversal right there too, by the way.
Okay.
So that was a decent spot, to put on an active swing long. That's the new point of reference we have. But I think over time that 50 gets taken out. Um, so I think it just, at times it's not pent up. There's not a lot of momentum and it's choppy. That this is one of those times, but I don't think that 50 is going to be the high of 2015.
Okay. Are you much into IPOs like Shake Shack? That thing is, active today or moving up here. Do you trade IPOs or do you give them some time to shake out before you trade them?
Well, Shaq's been around for a while now. It's almost 2 months, and when it came out with earnings, it was down like $2 or $3. And I know Mark, one of the head traders here, he's like, I still like it. And the stocks don't really trade on fundamentals in the first 3 to 6 months of existence. It's more on technicals and supply and demand. And there was a lot of people scratching their heads when Shaq reversed the day of the earnings. Say, how could this happen? And so at this point, you can't argue with the price. Same way, remember, with Tesla, it went from 60 to almost 270 while everyone argued with the price. But it was above the 1821 day, it was in a good trend. And right now, Shaq is above the 1821 day, absorbed bad news. So there are some guys and some funds piling into it. So I think
Interesting,
it's
yeah, interesting area up here. Thursdays and Fridays highs 49.48, 49.60, all time closing high 48.50. We're trading up from that. So big level up there, right at 49.60, the all time high.
yep.
Slower moving stock here has a sell imbalance today. Do you ever mess with GE or is that just something you have in your long term portfolio for the nice dividend?
I think a lot of people have it in their long-term account, and it's pretty much trading in par with the market. It came down to test a 50-day. I have it on my note because someone in my Redler All Access asked me about it. It's again, you could use the same technique with the 8 and 21 day for anything, and it was above the 8 day for a while. For the past multiple months, it was acting really well from when it broke above 24.50 before petering out there at 26 and a quarter. So if you got rid of some there, I was just saying, for a slow mover like GE, maybe you could buy the dip, buy versus the 50-day and sit in it. It'll be interesting to see what happens with that stock with the dollar strength. So I think people might be a little cautious about it, but it's not really. I trade GE maybe twice a year when there's a setup and it's tight and it looks like you can go and you grab a lot of size. Right now, this isn't a trading setup. It's just for someone that has who's sitting on money that says I want to put some money behind GE to buy GE around the 50-day over the course of the past century has worked.
Yeah, that's a good one. Are you going to be attending the Benzinga FinTech Awards coming up?
Are you going to be inviting me then?
Brianna's in charge of that.
Well, have you heard of the Benzinga FinTech Awards, Scott?
Wait, say that one more time, Brianna.
Oh, have you heard about the first annual FinTech Awards ceremony?
I've seen it and I've glanced at it. I'd love some more information on it. Could you tell me about it?
Absolutely. Well, 115 companies submitted their technology to the Benzinga FinTech Awards. It was an online competition that pitted fintech companies against each other for the title of Most Innovative FinTech Company. I mean, there's going to be C-suite executives, founders, managers of hedge funds, investors, venture capital firms, data engineers, business development, product managers, startups. You should be there too. We can give you more information about it after the show. But guys, if you like hearing Scott's daily take on the market as well as key levels, you can subscribe to the Redler All Access and get Scott's morning note, private Twitter feed, and daily video. You can call a number that I just put into our chat room and mention promo code REDDOG for $101 off the regular price, or go to the website that is also in the chat room right now. Scott, thank you so much for joining us this morning. As always, we love having you on Mondays.
Thanks for having me. Look forward to next Monday.